Good afternoon, traders. This is Trader Tim from over at eminimind.com, and we're doing a Monday market analysis video for the E-mini S&Ps, and we'll talk about a handful of swing trades as well. So I want to run through a handful of trades today, but we'll start with the bigger picture here with the S&P. And as we look at the kind of daily chart and the last couple of retracements that we've got drawn up, the breakout today, or break above the consolidation that we had last week, and more significantly, the close above that level, is pretty bullish. That and the fact that if I have drawn from lows to highs, we did not quite make it down into the 50%. So we were bought up before we made that full halfway back. So pretty bullish here at the moment, at least up until this 27.92. We talked about that level last week, just very simply pulling from highs down to lows and looking at that as a likely place where we would see some shorts coming in. If we move over to the SPY, just to get a sense of the volume, and this candle is actually incorrect. It didn't come down and close the gap. But the move from lows going to where we currently are, I mean, volume's been a little bit on the decline here on these days up, but not extraordinarily low. But there is a little bit of a decline, and anytime I see a decline in volume with a trend in the underlying, it's typically a sign that that trend is going to fail. So, we're trending higher on declining volume than we would typically look for the market to roll over. Whereas, like back here, we started declining as the volume was increasing. So that's a sign that the trend is likely to continue, and you want to be trading in the direction of that trend. So on the bounce here, taking the short at the halfway back, whereas over here, I'm looking more to short on the this little bounce is up, whereas this move is down. So looking to possibly short here around the 50%. If we look at the other top line, Dow, S&P, Nasdaq, and Russell, similar situation here on the Dow with a lower volume in more of the sideways movement here. And then, but if we go over to the Nasdaq and pull its halfway back, it's a little bit closer to that halfway point, and you had a little bit bigger drop off in volume over the days where the Nasdaq was rallying. And then the Russell's been the weakest. And if I draw its high to low, we have not even, not only are we not close, but we haven't even broken above the swing high here, whereas the S&P is, up trading in this region. But the Russell's volume is kind of remain consistent here, whereas the other three have seen a little bit decline in volume. The other bullish sentiment is the VIX. On Friday, we closed below the kind of halfway back point that was bouncing up around 55. And so the next sort of halfway back short, if we're going to just kind of continue those drawings on the VIX, would be a move up to 56 and would have to hold 59. So a little bit of a contraction in volatility. There have been a handful of bans in some of these other countries banning short selling. That can certainly limit the market's ability to move. Not there have been any bans here in the U.S. yet, but I thought that was interesting over the weekend. Swing trades. If I look at the two shorts that I had here, the ADS short below the low of the high bar, we gapped up today, and if I go to the 15-minute, anytime we gap up or gap against a position, so short, and then we gap up above the prior day's high. I just come into this first 15-minute bar, put my stop a few cents above that, and then that's where you can um, place your stop in case we have a gap up and we sell off. If we have a gap and go, then it gives you a place to get out of the trade nice and cleanly. And the same thing for 5. We gapped up, stopped above that high, and then that gets you out of the trade, both for decent gains from the low of the high bar, and then just trailing each candle's high, but not putting that stop in. The key is not to put your stop in like good till canceled. Put it in each day so that if you do get a gap against you, you can have time to manage that stop. If we go back to the BNFT trade, we had a gap up here on the 4th, and that putting your stop above the high of the 15-minute bar keeps you in the trade. And then we sold off, and then we're able to catch the next leg lower. If I go over to the ES, there have been last week I saw a few more counter trend trades, shorts at highs, working well, but by and large, trading the 15-minute, drawing up a retracement on the 15-minute, and then coming over to the 512 for an entry, or at the very least trading in the direction of the intraday trend, at or around those halfway backs, have definitely been the best trades. Today we had a fair bit of trades that pulled back to 50% here and traded pretty strongly off those levels as we were coming off of the 15-minute halfway back this morning, or kind of late morning, trading at the 50 up to the negative 23, and you just kind of follow those along. Ideally trying to take them early in the move as opposed to taking longs up at highs, especially when you're close to a negative 23% target. Those become a little bit less desirable, but micros after the 15-minute have been quite good. So this week I've got a couple of virtual events going on. Tomorrow I'm doing a day trading webinar with the Festival of Traders in the afternoon. We'll be talking about how you can adapt your strategy for higher volatility. And then Wednesday I'll be doing a swing trading stocks masterclass with some info on options and futures as well to use those to swing trade. So if you're interested in those, you can scroll down to the bottom over at eminimind.com, and the links are right there. So I hope everyone has a great week, and I will talk to you all soon.